If you're looking for excitement, don't come to the stock market. That's something I've believed for decades. If you need action, go to Las Vegas. The market isn't a casino, at least, it shouldn't be for you. Most people lose money not because they're stupid, but because they're impatient. They want movement, they want noise, they want something to happen. But wealth doesn't come from excitement, it comes from discipline. When I started investing, I wasn't looking for thrills, I was looking for value. My teacher, Benjamin Graham, taught me something simple: buy $1 for 50 cents. Not because it feels good, not because everyone else is doing it, but because the math makes sense. Over time, I learned something even more important. It's not about IQ. You don't need to be a genius to invest well. What you need is temperament, the ability to control your emotions, the ability to sit still when others panic, the ability to do nothing when others rush, the ability to say no when others say yes. The stock market transfers money from the active to the patient. That's not a quote for motivation. It's an observation. Look at history. Bubbles form, fear spreads. Greed rises, then fear returns again, and in every cycle, most people react emotionally. They buy because prices are rising, they sell because prices are falling. But intelligent investing isn't about reacting. It's about reasoning. When everyone feels safe, risk is usually high. When everyone feels afraid, opportunity often appears. That's why I've said, be fearful when others are greedy, and greedy when others are fearful. Not because it sounds clever, but because human psychology never changes. The market is a voting machine in the short run. It's a weighing machine in the long run. In the short term, popularity wins. In the long term, value wins. And long term is where wealth is built. I've held stocks for decades. Not days. Not weeks, decades. Because when you buy a business, you're not buying a ticker symbol. You're buying future cash flows. You're buying management. You're buying competitive advantage. If you wouldn't own a business for 10 years, you shouldn't own it for 10 minutes. That's not stubbornness, that's clarity. People think investing is about predicting the economy. It's not. I don't know what the market will do next year. I don't know what interest rates will do next month. I don't know what headlines will say tomorrow. And I don't need to. You only need a few great decisions in your lifetime. Not hundreds, not thousands, just a few. But they must be rational. They must be within your circle of competence. Circle of competence, that's important. You don't have to know everything. You just have to know what you understand and stay within it. The problem is ego. People want to look smart. They want to talk about complicated strategies. They want to impress others with predictions. But complexity is often a mask for insecurity. The best investments are often simple: Coca-Cola, American Express, Apple, businesses with durable advantages. Strong brands, consistent earnings power, nothing flashy, nothing mysterious. Just understandable businesses bought at sensible prices, and then patience. Patience is uncomfortable. Doing nothing feels wrong. Especially when everyone around you is doing something, but activity is not productivity. In investing, inactivity can be your greatest advantage. You don't get paid for trading, you get paid for being right, and being right takes time. Compounding is slow at first, very slow. But give it years and it becomes powerful. Most people quit before compounding shows its strength. They interrupt it, they reset it, they sabotage it. Because they need excitement. I don't. I prefer boredom. I prefer predictability. I prefer durable businesses. I prefer steady growth. And I prefer sleeping well at night. Risk doesn't come from volatility. It comes from not knowing what you're doing. If you understand what you own, and you bought it at a sensible price, temporary market drops are not threats. They're noise. In 2008, fear was everywhere. Headlines screamed collapse. Banks were failing. Markets were crashing. But businesses didn't disappear. Human progress didn't disappear. Productivity didn't disappear. Fear did what fear always does. It exaggerated reality. And those who remained rational were rewarded. Investing is not a game of speed. It's a game of discipline. The market will tempt you. It will scare you. It will excite you. It will test you. but it cannot control you unless you let it. You don't need brilliance, you need stability. You don't need constant action, you need consistent judgment. You don't need to predict the future. You need to prepare for it, and above all, you must understand that the market is there to serve you, not instruct you. Mr. Market shows up every day offering prices. Sometimes he is euphoric, sometimes he is depressed. You don't have to agree with him, you don't have to follow him. You only act when the price makes sense. That's it. No excitement, no drama, no noise. Just discipline, just patience, just rational decisions repeated over time. Wealth is not built in moments of adrenaline, it's built in moments of calm. And if you can master your emotions, you can master your results, because in the end, investing is simple, but simple is not easy. And the difference between the wealthy and the restless is temperament.